Okay, Craig, this is the major topic for us at Prevail, and that's taxes.
Yeah.
Not something you really think about, right? Because most people feel like we're being taxed at a high level right now. Actually, we're at a historically low as far as tax rates go.
That's right.
But how is this going to affect us in the future? It's such an unknown. How do we prepare for the effect that taxes have on not only our retirement, but our just our wealth in general?
Yeah, well, I mean, taxes erode value, right? It's just math. And you're right, we do focus a lot of attention on taxes as it relates to the planning process. And again, this whole idea of accumulating with distribution in mind, and partly because I think it's largely ignored as such an impactful component of how much you get to keep. So think about this. Anything that is accumulated in a tax deferred environment, 401k, IRA, et cetera, is not tax avoiding, right? We're not avoiding tax. We're just simply deferring the payment of tax. And then we're also deferring the calculation of that tax. So the question to ask yourself, I believe, is what tax bill do you want to pay? Let me give you an example. Somebody that's making $100,000, they contribute $10,000 into their 401k. So now their adjusted taxable income, right, it's down to $90,000. Maybe they're saving $2,000 on that tax. But that decision of deferring that $10,000 and the tax on that $10,000, as that continues to grow over a 20, 30-year period, that tax bill will also grow. It could be $18,000, $20,000 or more because you've got the growth on that. So again, which bill do you want to pay? Do you want to pay the $2,000 or the $20,000? Let me say it a little differently. Do you know what your tax rate is going to be in 20, 30, 40 years from now? Will it be lower? Will it be higher, right? You don't know. More so, of whatever amount that you've accumulated in those accounts, will the amount that you receive be sufficient to cover the lifestyle that you have? The reality is we don't know. It's this big unknown because we're in this partnership with the IRS and they get to decide how much of our money we get to keep at whatever time we distribute that. And the reason we believe that that's a problem is because, again, it's tough to plan when you have this unknown. The reason we believe that taxes are going to be higher is because, again, historically, we actually are in a low tax rate environment. We have been for a number of years. Our debt is far exceeding the revenues that are coming in. Our unfunded obligations are over $100 trillion. That bill's got to get paid. And the government either needs to, one, reduce expenses, increase revenue, likely a combination of between. So there's a lot of evidence that is speaking to tax rates increasing. And for us, that's a very concerning prospect as it relates to clients planning for retirement.
Okay. So moral of the story is there's just no way you can say that you're properly planning for retirement if you look at a tax deferred account and think that that's the amount that you're going to have.
That's right. You need to diversify, just like we diversify asset classes based on risk and return. Diversify asset classes by their tax bracket, their tax status. Invest in tax-free in addition to some of the other things is the moral of that story.
Awesome. Okay.
All right. Hey, good to talk with you.
Yeah. Thank you so much.
Thanks, Jordan.
Bye.